Hey, how are you? Hope all of you are well. It's your CPA Manish here. And today we are going to discuss if it makes sense for us to operate our practice, our business under S corporation status. Now, before we start our discussion, as always, this video is only for your education and entertainment purposes. It should not be construed as any type of tax or legal advice. With that, let us start our discussion. So, should I elect my business to be a S corporation or a small corporation? First of all, S corporation is not an entity structure. It's not an entity type. The entity type is only either a LLC or a corporation or a sole proprietor. But to elect your business or your entity as a S corporation is just a tax classification. It's not an entity classification. Entity is already decided when you form a sole proprietorship or you form a LLC or you form a corporation. Those are the entity types. But then you can elect that your entity or your business be treated for tax purposes as a S corporation. That is your tax election. That is your tax classification. Okay. Question is that should we do that or why do people do that? And that's what we are going to discuss today. If it makes sense for some of us or all of us to go for this S corporation election. So when we have a LLC, the members of the LLC, they are called as owners. They are the owners of the business. And these owners of the business are not employees of the business. As a matter of fact, when it is a LLC, it's a partnership. The members are owners, they cannot be employees. Now, because the members are not employees, they cannot withdraw any salary as employee of the business. So they do not have any salary payments. So whatever the business brings in, after all expenses, whatever remains, the profits, those profits are given to them as distributions. So this is the LLC structure. In LLC structure, the members are owners, but they are not employees. Because they are not employees, they cannot withdraw salaries. But whatever profit is left in the business, that is given to them as distribution. Compared to this, if the same LLC, if the same entity, if the same business elects itself to be treated as a S corporation, as a small business corporation, then these members are not only the owners, but they also are treated as employees of the business. So now what happens is, because it's a corporation and they are working for the corporation, the same owners can also be treated as employees of the business. And when they are treated as employees of the business, then they do get salary. They do get salary because they are employees. And after giving themselves salaries, whatever profit then remains, again, those profits are distributed to them as the owner of the business, and those are still called distributions. So this is the difference. If it's a LLC, you cannot be an employee. You can only be the owner. You can only take distributions. But if you elect to be a corporation, if you elect to be an S corporation, then you get to be the owner and the employee. And then as an employee, you get salary, you take salary, and as an owner, you take distributions. And this is where there is a disparity in the way these incomes, salary and distributions, the way these are taxed, that is where the disparity comes. So where is the disparity? So taking our discussion further, in the LLC, when you do not get salary, you only get distributions. These distributions attract two types of taxes. They attract two types of taxes. One, you have to pay income tax on the distributions, income tax to federal and to state. So you have to pay federal income tax and state income tax, maybe even local income tax. But then in addition to the tax on the income, which is income tax, you also have to pay self-employment taxes. Self-employment taxes. These self-employment taxes could be anywhere between 3% to 15%, depending upon a lot of other factors, which is beyond the discussion of this video. But on the distributions of the LLC, you have to pay two kinds of taxes. One is tax on the income, which is income taxes, whether it be federal, state, or local. But then in addition, because you are self-employed in your LLC, you also have to pay self-employment tax. Self-employment tax, which could be anywhere between 3% to 15%. Now, compared to this, if you see what happens in the corporation on the salary income, on the salary that you pay to yourself, yes, you have to pay income tax, federal, state, and local. And yes, because you are working, because you are employed as an employee, you have to pay self-employment taxes too. You have to pay income tax and you have to pay self-employment tax. But then after the salary, whatever is given to you in the corporation, which is the distributions, these distributions do attract income tax, federal, state, and local, but the disparity is on these distributions from S corporation, you do not have to pay self-employment taxes. This is where people end up saving that 3% to 15% on the distribution of S corporation, the self-employment tax. And that is where S-Corp election is many times so beneficial. And that's where people elect to do S corporation. So I hope you understood the summary thus far. The summary thus far is, in an LLC, I'm an owner, but I'm not an employee. So I cannot take salary. I only get distributions. And as I get distributions, I'm taxed income tax and self-employment tax. But when I come to the corporation, if I elect my LLC to be a S corporation, then I'm an owner and an employee. As an employee, I can take salary, and then as an owner, I get distributions. The salary still attracts the income and the self-employment tax, but the distributions only attracts income tax. It doesn't attract self-employment tax. Now, understanding this situation, there is quite a bit of possibility that this thing could be abused, could be misused. And there might be situations where taxpayers might elect to be a S corporation, and they would have a tendency to take lesser salary so that they have to pay less self-employment tax. Salary does attract self-employment tax. And if I take lesser salary, that means that I can take more distributions. And when I take more distributions, then I save more in self-employment tax, because distribution is not subject to self-employment taxes. People would like to do that, right? But here is where IRS has increased its scrutiny lately, and they want to make sure that the taxpayers do not abuse or misuse or manipulate this option. And they do take what is called as a reasonable salary. And they want the taxpayers to take reasonable salary and not abuse the system. This is where they have increased their scrutiny, they have increased their audits. and they want the taxpayers to take reasonable salary. Now, having said that, it's very funny that even though IRS wants you to take reasonable salary, the IRS guidelines or IRS tax laws or tax codes have not really defined what is the meaning of reasonable salary. Even though they want you to take reasonable salary, they have not objectively defined what is reasonable salary. Reasonable salary could be termed as anything that you would pay to someone if you were to employ someone to do the work that you do for your business. So if you were to employ somebody from outside to do what you do for your business, what would you pay them? That is reasonable salary. And that is what the IRS wants you to do. They want you to take reasonable salary on which they do want you to pay reasonable amount of self-employment tax. And beyond that, if you're making more income, that's your profit, that's your distribution, take that distribution legitimately, avoiding to pay any self-employment tax. Now, coming to the question, is this something for everybody to do? No, it is not something for everybody to do. It is not something for everybody to do because everybody might not really benefit from this situation. It depends upon what is your, it depends upon a lot of factors. We take a lot of factors into account before we come and suggest to you that you should be electing S-Corporation or you should not be electing S-Corporation. So we as accountants, we have to look at each individual situation and see what your leftover profits would be and compare that leftover profits. Leftover profits is income minus expense, whatever is left over for you, that's the leftover profits. And we have to compare this leftover profits with what kind of reasonable salary should we be giving to you in your practice, in your business, for your kind of work that you do. And if we compare the two and the leftover profit minus the reasonable salary, if nothing is left over after that to give you as profits or as distributions, then this whole thing doesn't really help. It is not going to be beneficial to you. Then we won't suggest that you need to elect yourself to be an S-Corporation. So we take that factor into account. What is the leftover profit vis-a-vis? What is the reasonable salary I have to give it to you? And then is there real benefit left in electing your business to be an S-Corporation? Many times this reasonable salary also depends upon if you are, for example, New York City business. If you're New York City business, you have to do salary optimization because in New York City, many times giving yourself more than reasonable salary also makes sense because it helps you save almost 9% in city taxes on the other side. So you might want to give yourself more than reasonable salary, which means less would be left for distributions anyways. So that saving in self-employment might not really happen for you. Many times we also have to look at what is called as pass-through entity tax. The salary that you give to yourself and what is left over is are also the factors, are also the functions by which the PTE tax, pass-through entity tax, is computed. So many times we also have to take that into account. And that brings restriction on how much salary we have to give to you as reasonable and what will be left over as distributions. Many times we also have to look at giving more than reasonable salary for pension reasons. Many times, the more the salary, the more the pension. To optimize the pension funding for the clients, we many times have to suggest more than reasonable salaries. So that could be another reason where the salary might be higher and the distributions might be lower, and electing S-Corporation might not make sense. So first we discussed why people do S-Corporation elections, and that is to save self-employment taxes. And then we discussed that, is this for everyone? This could or could not be for you. It all depends upon how much reasonable salary we have to give it to you and how much is left for distributions. If there is not a lot of money left on table for distributions, then S-Corp election doesn't make sense for you. I hope this helps. Please do let me know if you have any questions, and I will see you soon in the next video. Take care. Bye-bye.